Hey guys, welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries so that way you guys can become better traders. So we got a little bit to talk about, Patrick. Is the bull market back on? Um to be technically right about that answer, is this a bull market or a bear market? For 2022, it sure is a bear market. All right. For 2022, you're trading under the yearly opening range. That means you're red on the year. If you want to look back 5 years or 10 years, then yeah, you're still in a bull market, and Bitcoin's only always ever been in a bull market if you want to look at that kind of data. But like the data that we can use to help us get trade ideas, here in the near term, you're down on the year, and you will be until you get back above, $47,000. So as long as you're under that, you're still bearish or have the potential to be bearish. Once you get above that, then you're bullish. Then you can say that you're bullish on the year. And that's about all you can say, right? Because a lot of technical analysis is so subjective. So you have to use what you can see as technical fact and use that to make your decision, your bias. All right. As of right now, it is still bearish. You are still trading under that. So yeah, you're still in a bear market. You're at the low edge of the ascending channel, if you will. And you're getting a bounce from there. We had a bullish reaction a few days ago. That bullish reaction was met with a bearish engulfing and a close below. You did not close below these support levels, but you did get a daily closure below your monthly support. This is why you're having such difficulty getting lower. Let's get rid of all these lines here. You can see this is monthly support. And if we put on the 21 exponential moving average, let's see here. There we go. We put on the 21, you can see that price is still being caressed by that as well as support. So yes, if you are bullish on Bitcoin, this is where you want to buy. You want to buy supports. Now, does that mean that if you buy here, you're going to make money? No, that is not what I am saying. But what I am saying is if you are bullish and you think this is an uptrend, then you buy supports. You buy supports in uptrends. In downtrends, you sell resistance. And for the entirety of 2022, you have not been trending. You've been sideways. So one could easily, accept the fact that Bitcoin could indeed find support here, and Bitcoin could indeed, in the next month or so, turn back up to the bullish side. It just depends on if there is more demand or supply at these levels. That's what will dictate future price directions. And there is no indicator on the face of the planet Earth that will tell you what direction price is going to go on any asset. We have a lot of indicators that suggest what price is going to do, but none of them are 100% accurate. All right, so hopefully that helps. Basically, we're, testing supports. You got multiple supports. Almost on every single time frame you go into, you are at support. All right, so it's going to take a little while if it's even going to break down. Nobody knows if it's going to break down or not. You can see that on this weekly range, you got a deeper test of weekly support down here. And I mean, it's almost a perfect test of weekly support right there. Boom. So now you're trading green on the week. Today is Thursday, so we have, at least one more day before the CME closes. Today and tomorrow, I guess 2 days. You are trading above last week's open, which could suggest that we might see a little bit more bullish price action today. But with that being said, we're going to keep an eye on it because we know that traps exist. We thought we put in a trap yesterday. We were watching this region of resistance. And then at 9 o'clock, we got this spike right here, which turned out to be nothing more than a stop run. What stops was this candle running? Well, every single stop that got put in at 3 o'clock in the morning up until 9. Because you can see that price was trading sideways here at resistance. Okay, this one down candle here took out that little support zone. So that brought in, some sell side liquidity more than likely. And then boom, right up. So that more than likely handled most of those intraday traders, stopped them out, and then you got to run lower. We were looking for this, but we did not enter the trade. I was watching to see if supply held. It did not. The very next candle, you closed back above it. So then we were watching resistance. We never got to it until late last night. And I'm not a fan of taking trades during the Asian session, simply because in a lot of scenarios, the Asian session is the start of your daily range for these 24-hour markets. And the Asian session is usually, not always, but usually the false move or the first move of the daily range. And that's typically in the opposite direction that you want to be looking. You can test that data yourself. You don't have to take it from me. You can go back and test all the opens at the Asian session and see what happens. You'll find that, in most cases it turns around. All right, so moving on. What are we looking for now? Well, we are above all the highs that matter as far as for yesterday's range and today's range. We have a new high on the day, so that is suggestive that you would probably see continuation. But you're still trading inside of that bearish engulfing, which is pretty much running the narrative right now for any intraday trades. We typically, as traders on this channel, we trade to the upside and to the downside. We are not perma anything. We are perma price. We only trade price, what price is doing, what we think it's going to do in the future. As far as, is this still a bear flag? I would say the answer to that question is no. Once you get like 1/3 the size of your flag pole, you need to start seeing a breakdown. Otherwise, it turns into something else. And in this scenario, it's an ascending channel. And there are different definitions for what an ascending channel is, or what the scenario will be. Typically, they break down, but you'll find some technical analysts that say they break upwards. So, once again, pattern trading is so subjective, it's not even funny. What we do know is that we're still bearish on the year. We do know that we are still holding that higher low very, very, very narrowly. This wick low on this bearish candle did not take out this low, so you are still setting at a higher low. If you want to look at the 2-week chart and call this expansion right here a breakout, which it was, you broke back above resistance, you broke back above the 21 exponential moving average. So if you're looking at this as an expansion and this as a pullback or a correction, and you're looking for the next expansion phase on this, you still do indeed have that higher low. So that is on you, right? I'll leave that up to you. You have broken down below like the 618 and all the other metrics that matter on the retracement tool. So simply put, this thing looks like it's trying to break down, but it's having problems because of the mass amount of support that is down there. We can pull up, I should have had this already done, apologies, but I was looking at some other things. It looks like Glassnode is still messed up. I don't know what is going on with it, but it says right here, price data is currently missing for a short period between April 25th and April 26th. Metrics relying on price data will be inaccurate within this interval. We are working on the issue. So yeah, keep that in mind while using Glassnode or trying to get a bias from the data. Here is your futures open interest. Remember, when you start to get low like this, especially at support, it could suggest that you will see a bounce. It doesn't always work, but it could suggest that. I know there are other technical indicators out there like momentum oscillators and things like that, volatility oscillators that are looking for a move to the upside. And some suggest that we could see, 20, 30 to 40% move from down here. So basically, if you want to look at price and treat it or trade it the way we trade it, options or whatnot, that would suggest, a 40% move to the upside, you'd be looking for $57,000. A 40% move to the downside, you'd be looking at $26K. So you have plus or minus 57 as your top end of a bullish move, and then 26 for a bottom end of that move if you're looking in terms of a volatility expansion only. All right, there's no need for me to go in and show you all those indicators because so many other YouTube channels do that already. What we are currently watching is we are watching what we do with this right here, daily resistance. As long as we do not close back above $40,439, I will keep my short on. My short is here. I had this area as a short. When we traded down here, I took profits. Then I added to my short here on this spike, which brought my cost basis down to 42K. This did stop me out, but I reinitiated a new short position there. And so far that position is in the money and has been in the money since that day. I am looking to re-add. I hate to add to a short position down at these levels though. That's why I'm being so cautious about throwing on a new position, because we are right in support. And I'm talking about higher time frame supports, monthly, weekly, daily, 3-day, every time frame above a daily. And on the daily, you are still at support. All right. So basically every single time frame, you're at support. So taking a new short here means that you're only going to be targeting that support area. So we'll watch daily res. Once again, $40,464. If you get a daily closure above that and you take out the high of this bearish engulfing, then you could potentially be looking for the next area of resistance, which would be 41,000. So about $1,000 move from here to there. If you want to look for shorts, you got to watch resistance. You're already above daily supply. However, you have not closed today's range yet. And if you look at the intraday charts, it does look like, it does want to go higher, but at any point this thing could roll over. This is your first close above resistance once you put this candle in. So you are making higher closes. That means you are taking out resistance levels to the upside, and you have taken out all the relevant swing highs for the last 2 days, which would be yesterday's high and the high that you had today. You have already taken those out. So the next high to take out would obviously be the bearish engulfings high, and that's up there. So what we're going to do today is we're going to see around 9 o'clock, does this thing put in a big move to the downside again like this? And will that have follow through? Typically, when you get a big expansion range like this, the very next day will be a small daily range. And then the next day, you'll get your move. We are still very early into the day. We haven't even hit the New York session yet. So there is no reason to assume that this thing is going to break out bullish until it does. Okay? There really isn't anything to look for resistance as far as intraday resistance. There's just nothing, right? Because the move was so big the other day. So even looking at the 30-minute chart, you can see that entire move was just straight down without any up closing candles. You have one here on the 15-minute chart, but once you start getting down that low in time frame, I start to put way less, I don't know what you would call it, I guess, way less weight on that level holding as resistance. So we'll just see what happens. Overall, my bearish bias is still on the table. When you hit a yearly opening range like that and then you get deflected in a massive way like that, yes, the technical bottom could stay intact and you could bounce and go to the moon. Nobody knows what price is going to do. Just play the levels. Don't worry so much about patterns. But this is a breakdown region. This line, in my opinion, is probably the better line to look at if you want to look at the the line chart, which calculates closes based on, or calculates the move based on candle closures. You have already broke down. So that is suggestive that this will find resistance and roll over for another expansion to the downside, if this is going to play out the way that it has been playing out. Remember, we were following this first peak, or this first swing low, as that put in a bear trap and then moved off to the upside. Then you came right back down and immediately broke down, and you played around this level for, multiple days, like almost 2 weeks, You even closed back above it on 2 occasions, and now you're back under it. So yes, even though we're moving higher today, I am looking for resistance. If we get a daily close above this swing high, then the next level to look for, once again, will be right up into there. So it is what it is. You're trading under it, and you're still not under the wick lows, though. Once you get under the wick lows, you've pretty much completely broken down from any trend line that can be drawn from this region. It's choppy sideways price action, and that's to be expected in a market such as we have. Let's go over here and look at this real quick. This is your BOJ. BOJ is still dovish. Uber dovish. Just as dovish as the US Fed was when our risk markets were absolutely going to the moon. They still are going to be buying bonds, all of them. JGBs, 2-year, 5-year, 10-year, 20-year, 30-year, and 40-year bonds are buying those. If you come over here and look at the USD JPY, you got a massive breakout. You hit 130. You haven't hit that price since all the way back. Well, I don't even have the data on this chart. Let's go to IDC. They have the most data. Let's see here. 130. Last time we were in 130 was March of 02. All right, March of 02. So a 20-year high was just made on that announcement that they're going to remain to be dovish. They obviously do not mind that their currency is falling off of a rock. Now, it's important to understand that this currency it's not like, just because the Japanese yen is going down, it does not mean that their economy is crashing. In fact, their economy is doing great, and that's why they're not going to become hawkish yet until inflation gets out of control for them. They're still sitting at around 2% inflation, so they're doing fantastic on their inflation. If our inflation was still setting at 2%, we would still be seeing, SPX hitting all-time highs and Bitcoin hitting all-time highs. So monetary policy basically controls currency products. Any currency products, monetary policy is what controls them. So basically, it doesn't mean that the Japanese yen, it's going to crash or destroy their economy. It has nothing to do with that. Monetary policy is just controlling the strength of the currency versus other currencies. So when you look at a bottoming Japanese yen, it just means that relative to the pound or the euro or the dollar or the Aussie or the Canadian loonie, relative to all of those things, the Japanese yen is weak. But relative to Japan's economy, Japanese yen is doing fine. All right, it's important for you guys to understand that. Just like our economy, right? The DXY, just because it's going up, it doesn't necessarily mean anything bad for the economy. It just so happens that it's going up while we have rising inflation. But I assume that the reason it's going up is because it is pricing in the 6 rate hikes that we're going to get this year. I heard somebody talk about yesterday on YouTube that this is probably going to be the top because they're going to bring back QE. There is no data that suggests that. None at all. All the macro data that I've looked at does not suggest that the Fed is going to stop. In fact, they are going to remain hawkish until you get a CPI print that is either maintaining current levels or dropping. Until that happens, you are probably not going to see the Fed become dovish. They need to get in control of that inflation. Inflation is the one thing that can destroy an economy. Inflation is very bad. Very, very, very bad. And if you don't believe me, just look at the Weimar Republic. Good morning, everybody. Good morning. Thank you guys for being here. All right, so let's look for a trade. There's nothing to do on the euro. Obviously, dollar strength is fantastic for the euro. I am short on this. This trade is looking good. It's in great shape. I was thinking about closing it yesterday because yesterday is when we took out these pandemic levels. Remember, this is when we had the pandemic, March 2020. when we had that massive influx of capital into all the markets, and this thing dropped and set in that low. Well, we are below that now. So that's why I was essentially looking to potentially close that short position, because I was going to see if this liquidity was down here, got bought into, and so far it hasn't, but this is a move that could take 3 to 4 days to play out, right? A lot of liquidity will be generated down at these regions. You have been in a downtrend for a very long time, and although we do trade with the trend is getting a bit extended to the downside. Here is your RSI. You hit oversold regions. So, yeah, it's time to start looking to potentially close some shorts. Maybe look to add again if we get a resistance hold. But as of right now, taking profits is probably the thing to do. And the same goes for Bitcoin, right? But Bitcoin on the RSI has basically just been trading sideways, just like price has been doing. It's just sideways. You still have plenty of room to go before you hit oversold regions. It's because of these bullish bounces that you're getting. And if you look here, from the time that you put in this original move lower, you've basically went nowhere. So for 3 weeks almost, price has done almost literally nothing. I mean, bouncing from 43 down to 37. So I mean, it's a pretty good range, $5,000 range, but for weeks it's been trading in it. So we're kind of looking for a resolution on this range one way or the other. And it doesn't matter to us if it goes up, because we are not bears, right? We just trade direction on price. It's at the weekly open, so if you continue to start close like bigger time frame candles to the upside, like the 4 hour for instance, then we're probably going to be looking for a target of this swing high, and I will close that short position and then look for potential longs, seeing how we are down at these levels if support continues to hold. So that, like I said, guys, that's going to be your decision to make, whether you want to get long or if you want to get short. I am still expecting a downside capitulation move, as typically you get those in bearish markets. All right, typically you get those. Doesn't mean you will this time, because past performance is never indicative of future results. Bitcoin can absolutely bottom here and go higher. It is not what I am expecting though, because remember, we've only had one hike. There is 6 more coming. That's why this thing is trading sideways more than likely. It's waiting and waiting and waiting. You would think it would be pricing in that, but apparently it's not. There's also something else that you need to be aware of. They are pushing for a ETF this July, so there's a potential for that. If that ETF is allowed to go on, you're going to have a potential major bullish catalyst. Because if I ain't mistaken, I do believe it is the one spot ETF that they've been trying to get for so long. That could be a massive bullish catalyst for Bitcoin. An ETF, a spot ETF, that would be fantastic. Be able to trade the spot price of Bitcoin in the New York stock market. That would be a fantastic bullish catalyst. So we'll see what happens. All your yen pairs are going to be trading to the moon today. Massive move. 1.3% on pound yen. You got 1.6% on USD JPY. Aussie yen is at over 2%. I mean, what a move that was. 2%. That's what it looks like. You are coming into resistance though, and the fact that they are going to remain dovish could suggest that this thing is going to find this as support down here, but time will tell. So as of right now, you're still bullish. You got under the 50, but then you're back above it. So as long as that's occurring, the trend is your friend, right? So give this market a few days to decide what it wants to do here. If you get back under that, then you could potentially look for lower prices. But as long as you're closing above it, you're going to be potentially looking for support, all right? Just because it's stretched out does not mean it cannot continue to go up. Aussie has been strong while all of this stuff has been going on since the war started in Europe. Aussie's been really strong because the war and inflation has made commodity prices go up, and Aussie dollar is tied in with a lot of commodities. So as long as commodities are going up, Aussie is going to remain strong. commodities pull back, you're probably going to see a pullback on commodities. If commodities pull back, you're probably going to see a pullback on Aussie. U.S. oil struggling at support to break down. This is wedging up. So look to sell the top end of the wedge. Look to buy the bottom end of the wedge until you get a break one way or the other. There's no way for me to say it's going to go lower or higher because I just do not know. But looking at the technicals, right now, as long as we're trading under this resistance level of 103.99, my bias is a little bit to the downside. U.S. oil needs to be cooled off, and the U.S. can absolutely inject supply into the market. They can just release a ton of supply that will control oil prices. Oil is, something I don't really trade much because of so much government involvement, but I trade Forex, and nothing is more governmentally involved than foreign currencies. To be honest with you, I would trade oil if they would allow us to trade CFDs in America, but they just don't for whatever reason. I don't see what the problem is. I have no problem with CFDs, but the government does. Donut Lord says, what's your opinion on FTSE 100, UK 100? Let's go look at it. It's probably going to look a lot like, the SPX and other things. We're going to talk about the SPX. Actually, it doesn't look like any of those things. It found support. It typically has been finding support. You almost made new all-time highs. I don't trade this asset, but it does look like it's trying to rebound here. You found resistance, but you found resistance at the highs. So basically, you've retraced the down move. So now the real move might happen. Right now, there's nothing to do on it because it's trading at the high of day. We're getting ready to trade back into resistance. Last resistance level is going to be there. Let's see, we're already trading at this one, so we'll use this one as a guide, or you can use this one as a guide today because, it is what it is. The London session is in full swing. It got started just a couple hours ago, so if you're going to, you probably set in a low of day already with the daily range expansion, so it's probably going to go up a little bit higher, and then you'll have to wait until tomorrow to see if it wants to look for a support test or not. But yeah, there's really nothing else to say on it. You went right back to the highs, and if you look at the weekly time frame, you closed a weekly above resistance. So this has to be looked at as a pullback. Has to. You're bullish on the week again, so that's going to look like a pullback. And then you're going to be looking for a support test more than likely in the next coming weeks. As long as, whatever's driving the price, whatever's driving investors' influence over there, you just need to stay on that, right? I don't follow it, so it doesn't really matter to me. Gold, we were looking for gold to go lower, if you remember, because of real rates. I said I expect gold to go lower. But it did break out above resistance, traded above resistance for a couple days, and now we're down. So that's what I was expecting to happen. It looks like you got like a week or a week and a half of a fake out move. Now the real move is occurring. You are lower. I expect it to continue to go lower. This big reaction right here was just because of what was happening over in Europe. There wasn't really anything that, and also inflation. Gold does pick up a bit in times of inflation, but the rate hikes are supposed to take care of that. So gold will probably start to sell off again or trade sideways. As long as you're under the 21, that's a pretty good range for looking at day trades for biases. Obviously, you don't want to get short at the lows. You want to wait for resistance tests to get short if you are short the gold. Is it a buying opportunity on gold? It could be. It could be, but a lot of other things are going on right now. There's other financial products that you can put your money in right now and generate positive alpha on other than gold. Because remember, with gold, you have to pay storage fees, this, that, and the other. So there's really no alpha or any positive alpha that can be generated on gold with real rates rising. So gold's lower. We're looking for gold to go lower. And it is happening right now. You're going to probably see a bounce here, the weekly 21. But you could see, like, since we made new all-time highs in August 21 or August 2020, the 21 really hasn't been narrating this very good. It's been choppy and sideways. These weekly candles here, weekly candles, a lot of choppiness, a lot of sideways. Look for this move to get a little bit more done potentially in the coming weeks. Watch that price right there, 1919, as potential resistance. So if this week closes back above the 21, see if this area acts as resistance on gold. And it's also daily support. Let's go look at HMR, because that's a trade that I took the other day. We took this trade right here at 278.67. We got short. Obviously, it was trying to pick a top, but there was other reasons why. Simply Bitcoin was the reason. I think a lot of these assets, if Bitcoin does break down, these things are going to break down. This asset had a nice bullish bounce off the lows. I'm pretty sure that is your yearly open right there. So this asset is bouncing off of the yearly open right now. Okay? So this asset was bullish, and now it's testing support to see if it wants to continue to be bullish. We got short up here. I am still holding that short. I will probably close it, which I already took profits on it, so it's just a very small piece left on. It's just a runner. But if we close the daily above 254, then I'll probably shut the trade down, because that could suggest that we're going to go higher. You test the yearly opening range, it finds support for 1-2 days. You've taken out this daily high. So if you get all the way up there and you close above that, then that's suggesting price wants to go higher, and we will, potentially look for longs. Remember, yearly opens are very good areas to watch if you're at the beginning of the year. We are just starting Q2 2022, so since these assets are trading at and around their yearly opening ranges right now, these are typically decent spots to look to get into if you're a position trader. If you're a swing trader and you're looking to set in a trade for a year, then yearly opening ranges are great places to look. Because if you think the asset's going to be bullish because the backdrop or the macro backdrop supports bullish price action, then the yearly opening range is typically a good spot to get long. If you think the macro backdrop is bearish and is going to support, lower prices, then the yearly opening range is a good spot to get short, because you're looking to capitalize on the yearly range expansion. All right? So that's the reason we look at them. Last year, had you bought the yearly opening range at 172 at the close, you would have been at 229. So you close the year out with a profit. And you can look at most assets and see that same trend. Doge, if you would have bought Doge at 6 cents and closed the year at 16 cents, you doubled your money on Doge. Same scenario for all of these assets. Last year, $5.60 on Ethereum Classic. If you took profits at December around Christmas, which so many investors do, you made an insane profit on Ethereum Classic. What is that? That's like a 6x almost. So that's why we're watching the yearly open. After Q2, once you get into Q3, if you're still trading around the yearly opening range, then you get what I'm saying, right? Most of the year's already over at that point, right? So June is pretty much the cutoff point for yearly opening ranges. That's pretty much when you're done, because after that point, it should start to move in the direction it wants to close the rest of the year out. Can you close as a doji on the year? Yes, you can. You did here, and you pretty much did here for an entire year. If you bought at $4.40, you made profit of $5.60 if you took profits at the end of the year. On this year, if you'd have bought the open, well, you lost money. And that's how trading goes. Investing, trading, that's how it goes, guys. Nobody knows what's going to happen, ever. But typically, I'm only bringing all this up so that way, if you guys are looking for hodl positions, If you're looking to buy your favorite alt, right, because you think it's going to close higher at the end of the year, then look for assets that are trading around or, at the yearly opens. Most are trading under. These are the only ones that I found on KuCoin that are bullish on the year, except for XRP and Ethereum, right? XRP and Ethereum. The reason I put them on there is because at the time they were trading very close to their yearly opening. But the rest of these things are trading bullish on the year. Well, except for Near also. Damn, Near. All right, let's see if this comes back. All right, sorry about that, guys. I have no idea what's going on with OBS. It just stopped, and now it's back. All right, so that's that. All right, a lot of these assets are getting real close to that. Luna was at the, right there. So this, it could suggest that Luna wants to go higher. Luna has been absolutely unstoppable for a very long time. Luna has been in a bull market for a long time, and it's still continuing to do as much. This is your yearly opening range on Luna, so as long as you're trading above it, then you can look for potential higher prices. All right? It doesn't mean you will get higher prices, but you can look for higher prices. And vice versa, when you get back under it, then look for lower prices. All right, let me go up here real quick and just check out some of these questions. Personally, looking at a retest of the 4-hour 21 MA to hold to add long. Staying cautious as this could be a bounce before going lower. It could, but you are at support. SPX and Facebook. SPX is same thing as Bitcoin. You are getting a bounce. You're testing the weekly open now. So to be honest with you, if the SPX is going to go lower, right now would be the time when you would look to be entering that short position. You are testing daily supply. Also, same thing as Bitcoin. You got this massive bearish candle here. It did close below daily support, but you are getting a bounce. That is the lowest edge of that, right? So you did close below it. Now you're getting a bounce. So as long as you're trading under this candle's high, you can look for lower prices. If you get above this candle's high, well, then something else is probably going on, as that will indeed make this candle a potential trap. So right now is probably where you want to start looking for intraday resistance. I wouldn't look to short it exactly right now because it's green on the day. There was your res, there was your stop run, and you've closed another expansion higher. So you got to wait for a rejection. This is not a rejection. A rejection is when you take out multiple bullish candles ranges with a close. That's a rejection. When you're trading, just half of the distance from your last candle closure, that's not bearish. That is not a rejection. All right? This is like a bull flag, if you will, right? So just watch 42.58. If you start to get more closes lower, then you can look for a resistance test, and you could potentially look for short entries. But once again, you're at the very bottom of this range. So getting short down here is okay. You can't be targeting as much as you could have been targeting up here because you're at support. So 42.58 is the level to watch today. If you're closing, which you are currently closing hourlies back above it, then you're probably not looking for the short today. Pound yen, there's nothing to do. Pound, nothing to do. You're already close to the low of day, so that trade's already played out, unless it decides to become a long, which it could. But yeah, the dollar's strong. I don't know if I would be looking. That's a counter trend trade. Looking to get long a pound is an obvious counter trend trade. So I probably wouldn't do anything with it. We missed 3 beautiful trades this week. We just missed the entry. Aussie yen didn't give us an entry, which it wouldn't have mattered because we'd been stopped out by today. Because we were looking for short entries, but Swiss franc, Japanese yen, We were looking to get short that asset, and it ended up working out. But once again, we would have been stopped out today as that, BOJ meeting. And then I don't remember what the other one was that we missed, but we missed 3 fantastic trades this week. I am still short Euro USD, and that's it, right? I am short a couple other plays. I have a couple puts going on in the options market, but crypto, I'm short XMR and Bitcoin. That's it. That's it. That's all my open positions. So Euro USD, short Bitcoin, short Euro, short XMR. Obviously, I'm long Bitcoin in the HODL account. I know it's a little bit confusing for new traders, but it's just the way it is. So what are we looking for to trade today? It's going to be difficult, guys. It's going to be difficult. Let's go back over here and look at NZD Swiss franc. NZD's been a little weak. That's going to be strong, but it looks like it's getting sold back into. This might actually be something to watch. Maybe not today, maybe tomorrow. We'll watch to see if intraday resistance holds. So we'll watch these 2 price points here on NZD Japanese Yen, 84,962, and we'll watch 85,329. The daily opens way down here. This thing is very bullish on the day. Okay? So what we want to see is we want to see a rejection, a failure to get above that before looking for shorts. The overall order flow on this is bearish. This spike could potentially be sold into. All right? But this isn't going to be today more than likely. It could. It absolutely could happen today. Watch those 2 prices, 85,329, 84,962. If you do close above 84,962, then obviously you'll be waiting for that resistance test. But it looks like that's already playing out. That move's already playing out. Same for the Aussie Yen. So we'll see what happens on those. Let's see if there's anything else closer to 0%. There isn't. We'll have to go over to the Forex nope, not Forex.com. My Forex. Yeah, we don't trade that. CAD Swiss is close to not doing anything on the day. Maybe you can take a look at that one. Euro Aussie, not doing a lot. Euro Pound, not doing hardly anything. All right, so we can watch Pound Euro, or Euro Pound, sorry. Let's see what we got. Real quick, let's just give us a brief analysis. So we're bullish. All right. There's daily support. All right, so, man, you could get a spike all the way down to there and still be bullish. I don't know if you'll get that. But we can watch it and see what happens. The reason I'm looking at it, if you're new to the channel, is because it's in the middle of the range, the daily range. And when you're trading at the open, because these things opened the previous night, then that means you're sideways and choppy. So typically we'll watch these areas to look for either longs or shorts because the expansion hasn't happened yet. Personally, yeah, read that. Facebook was getting slaughtered. I'm not bullish. Oh my God, earnings. Yeah, I mean, not bullish on Facebook, but earnings is really bullish on Facebook today. But this thing is getting absolutely hammered. So this is going to be the question. Do you think that the markets are going to recover? If so, you're at 209. Where is 209? So roughly into daily supply with that move. So this is roughly where you are. Right here. So we'll see what happens. I mean, obviously there's nothing to do now. That's a big, big move. If you start trading above that, maybe you get bullish continuation, but that's a fantastic move. So they must have had really good earnings. And it happened last night. So That's why people are looking for it. If you're looking to trade options on this, don't do it, because since the earnings happened yesterday, your implied volatility is going to make your premium much more expensive, and just a sideways market can make you lose money. There's really nothing to do. This is a long-term play. I wouldn't be looking to day trade it, not because of that. Which it could be open right around 187 or something like that, then maybe it will be a trade. But as of right now, I don't have enough data. I see what happened last night, but I can't see what happened, where it's opening at today. So we'll see what happens when it opens. It's just, if you want to buy it for a long-term hold, yeah, it's probably a pretty good value, 55% off. So it just depends on what's going to happen. I could see this gap getting filled, but I'm pretty sure people assumed that gap was going to get filled on this swing high. And boy, were they wrong. But that is a massive gap. It probably will be filled one day. So if you're looking for a long-term hodl, yeah, anywhere under $170, in my opinion, is a pretty good place to add a few shares. But it can still go a lot lower, but it is cheaper than it was. A lot better off to buy down here than it is to buy at all-time highs. What's happening, Clipper, Run DMC? So, do you think useful to look at BTC Euro if you live in Europe? I mean, it could be. You're trading with euros, so, and more, It looks almost like the dollar. The euro and the dollar are so closely related to one another. But you could see on Bitcoin versus euro, you're already into that daily res. You're already there. We're not there yet on the dollar. That's because the dollar's strong. That's another thing I don't understand. Like, this thing should have been breaking down because of the strong dollar itself. Dollar has been on fire. This could have been a straight down move, but somebody's buying. So yeah, I mean, if you use euro and you're trading with euro is your currency, then yeah, you can trade Bitcoin versus the euro. It's going to trade very similar to Bitcoin versus the dollar because the dollar and the euro are so tied up with one another. But here is this thing here. I just want to see this real quick because, it doesn't look like we're seeing much accumulation down here according to this tool. Not much accumulation happening. So why isn't it dropping? That's a good question. But this also takes data from exchange. Keep that in mind. When Michael Saylor bought his, $5 billion worth of Bitcoin, he did not do it on exchange. So somebody's buying. They're just not buying on exchange. But somebody's definitely buying. This thing should have already been down. Somebody's buying. So we'll see what happens. A liquidation or a move above this swing high is going to spawn one of the biggest short liquidations you've ever seen. Right? So many people are bearish because of the macro outlook. But keep that in mind. But yeah, it could be useful for you. You can trade it even. Strange idea, but could the beginning of the rate hikes actually mark the bottom, as perhaps all rate hike related selling has finished being priced in? Hopium? Yeah, that's all it is. It's hopium. That's it. Typically, rate hikes are not bullish for risk assets. But if Bitcoin changes from being a risk asset, which it could tomorrow, it could decouple from trading as a risk on asset that quick, right? So, but as long as it is being traded as a risk asset, no, rate hikes aren't going to be good for Bitcoin. The market does do the things that hurts most people in the near term, but your bigger term macro investors, your billionaires, they're going to be the ones that dictate this market's direction. Are they buying Bitcoin or are they selling Bitcoin? If they're selling Bitcoin, Bitcoin's going lower. If they're buying Bitcoin, Bitcoin's going higher. It's as simple as that. But yeah, looks like we like we look at S&P to get an edge. Oh, support and resistance or supply and whatever. What about on Euro USD? To get an edge on ETC. I got you. Yeah, I mean, you could. I don't see the point. I mean, they're going to be trading so closely. I know what you're asking. Since it's trading at resistance, could that be a leading indicator that this daily range is going to expand on the Bitcoin dollar pairing? I don't have the answer for that. I've never done any. I don't have any data that suggests that as a fact. But you could test it yourself, my friend. You know what I mean? Run DMC 555. You can test that data yourself. And you can start with today. As of right now, you know that Euro Bitcoin is trading at resistance, whereas dollar Bitcoin isn't, or Bitcoin dollar isn't. So is it an edge to get from 39 to 43? Maybe. I mean, any penny that you can take out of the market with an edge is an edge. Instead of, that's where a lot of people make mistakes also. They're looking for the massive moves. When if you can, have a higher hit rate, like a 60% hit rate on profitable trades for 5-cent increments, you can be the richest man in the world. You can just do multiple trades like that. But I don't have any data that suggests that it would be useful, unfortunately. Can I take a look at Luna? We did already. It's trading just above the yearly opening range, and it's trading at resistance. But I will pop it up on the chart real quick. Same thing that happened on Bitcoin happened, across the board. You got a bullish engulfing there. After you break out, that's your trap. 95.46 is your resistance level. In order for Luna to trade higher, it needs to get above 95.46. If it tests 95.46 and rolls back over, I would be aiming at the yearly opening range again. Right? Because it does look like you were getting a bit of bullish momentum, but it looks like that bullish momentum has stalled. And you have been making lower support. So each of these bearish closes have been lower. And the only bullish close that was higher was this one, and it was instantly sold into. So today and into tomorrow, my bias on Luna would be near term short, but that's just to here. Once you get to there, I'm taking profits. I'm moving my stop, because once you get to there, you could absolutely find support and then boom, smoke that high, right? So you do have a range of liquidity here on Luna. There is the highs. So that is your bullish target. Here is the bearish target. 86.77 is your bearish target. 99.50 is your bullish target. But if it finds resistance at 93.59 or even 96.96, my trade, or the trade that I would take, would be looking for the low edge based solely on that bearish engulfing. But bearish engulfings can be traps as well. But since you're making lower closes on support, you just have to lean more that direction. It's the more higher probable trade. I am holding or looking to hold Bitcoin till year end. At what price should I go long? All right, my friend. First and foremost, this is not a signal service. I am not going to tell you where to get long, ever. I will tell you what levels to look at and what I'm thinking about, but that doesn't mean it's right. I lose trades. I win more than I lose, but I do lose them. So, I mean, you would have to ask yourself that. First and foremost, I don't see why anybody would just want to get long Bitcoin and hold for 1 year. We know the new halving is coming up in 2024. I definitely want to be long going into that, because if history is relevant at all, every single time Bitcoin has went into a halving, it's had a massive bullish rally after. So, I mean, if you're looking to hold it for 1 year, yeah, I mean, you're kind of defeating the purpose. But you're bearish on the year, so anywhere it is right now would be, probably a decent spot to look to start buying it, because it is at support. It does not mean the support will hold. Nobody knows if the support will hold. Nobody knows what's going to happen ever. All right? But you're at support. Up here is your yearly open. So that's your decision to make. Not mine. NDX. Let's go look at it. NDX looks worse. Looks like, so yeah, I mean, like I said, on the SPX, you're probably going to be looking to sell that today. We're looking for lower prices. NDX is already done that. Sorry. I'm going to get a new microphone soon. Hopefully it'll kill the echoing and a lot of the clicking you hear from the mouse and the keyboard sounds. I understand all that. But we'll see what happens. It's going to be a while. But anyways, here, this thing is already traded up and found resistance. It found resistance at your bullish candle. So basically at your intraday support or supply, apologies. It didn't find it at the close or the open of the candle. It found it at the low. So that does suggest that you're going lower. You can, oh man, you closed below support yesterday. Today, you've already taken out that low. Is this asset even trading right now? Is that yesterday? It's probably yesterday. I think I can do ND. That's NDQ. NDX. Is this one trading? I don't know if they're trading right now or not. I mean, you're under support. So, it looks like it wants to go lower. Looks like it wants to go lower. That's all I can say on it. Can you make a comparison of Glassnode accumulation data for the 2020 top as the current consolidation? You can just by looking at it. You can see that a lot more accumulation started happening after the all-time high was put in. That's what retail does. Retail buys the tops. That's where your accumulation's happening, right? That's why we know this was the high or the top of the market for the near term, because retail does that. They do it exactly the opposite. People are always wanting me to look at assets that are moving really, really much, like a lot had a big explosive move on the day because they want to buy the top of that bullish candle because their emotions just will not let them buy red candles for whatever reason. But the tops are always heavily accumulated. And then boom, the bear market. Now, to be fair, this was when a ton of accumulation started happening. This is the 2017 capitulation move lower after the bear market. So let's use that. It's one data set, but it's a good one. We have similar reaction to what we have currently. No accumulation happening at the bottoms, right? Then you break down. Boom, 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 boom. Lots of accumulation on the whole way down. Then not a lot of accumulation because whoever bought this is what happened later on, right? This buying is what fueled the rest of the move. And then obviously there's more accumulation going on there. So let's zoom out for 5 years. So yeah, beautiful amount of accumulation happening at the lows there. Once again, beautiful amount of accumulation happening there. Some accumulation up through here. But so basically all these people, they're probably selling into all of this, right? So right now, you know, more accumulation happening at the swing highs because retail just does that. So to me, the data, this chart suggests that you're going to see lower prices, right? And that's always what I've only always said that. It just suggests because they get their data from exchanges, okay? And then they pipe all that data in, and then they have algos and stuff that basically put all these little beautiful charts together. So they do not have the info. Like I said, they do not get the buying info from Michael Saylor or Elon Musk or any other billionaire that needs to put a big position on Bitcoin or to exit a big position. They do not do it on exchange. They just don't. because it will move the market. Bitcoin is a young asset, and it has a lot of users in it now, and it's getting more and more as time goes on. But until you have, a lot of users in it, your price fluctuations are going to be big, and simple buyers and sellers can make that price go lower. So it does not take into account that data. But for what we can see on exchange, nobody's accumulating. Not yet. I'm assuming that once you do finally, if not once, but if you do finally get that breakdown, that's where me and my team are going to start looking to be buyers again, right? The breakdown, that's where this thing will start to fire up again, probably, when the real buyers start to pummel the markets again. And that'll be, a good time to look to become a buyer. Also, another thing that suggests that, you're not ready to be a buyer on Bitcoin yet is the MVRV Z-score. Typically, when this thing is in the green, that's when you want to be a buyer. Now, this again is just an indicator. It's not 100% accurate, but it has been in the past. It has been in the past. When you've gotten to the red, it's been a pretty decent time to sell. Red, sell, red, sell, red, sell. Notice how you got in the red at the move up on the first new all-time high. Boom. So we're looking for that capitulation move lower that will put you in the green zone on the MVRVZ score. Other people are using other Glassnode metrics to say that this is the time to be a buyer. I'm using the ones that I find relevant. It's as simple as that. You do not have to agree with me at all. But I've been right for the majority of this bear market, right? I started telling my people to look out in October 2021 because that's when the Fed said that they're going to start raising interest rates. And even then, people were like, oh, they're not going to. They can't. Yes, they can. They can absolutely raise the rates. They can absolutely crash the market. They can absolutely break something. To fix inflation, they will, more than likely. But I'm looking for this to break down, capitulation move lower, and, that trend score suggests it. It only suggests it. You're not getting a whole lot of accumulation going on yet. It could, but you're just not yet. So, yeah, 2020 top was distribution. Most tops are distributions. That's why they're tops. All of your tops in Bitcoin are distributions. Exactly. You want to sell high, right? Buy low and sell high. So the higher a market goes, that's when you start looking to be a seller. Like me on Euro, I'm in a position short on Euro. I am looking to start taking profits now because we're getting, pretty extended, right? It's the same scenario. You buy low, sell high. You don't ever want to be a buyer at a market when it's been ripping to the upside. You want to be a buyer of a market when it's been ripping to the downside and is extended to the downside. The pattern that we're seeing on Bitcoin suggests that you're going to see a breakdown, but that's just an opinion. That doesn't mean it will. I think it's going to break down soon or eventually, but I could be wrong. Right? I'll change that opinion if we get back above the yearly open. We make a new 2022 high, then I'll be, looking for bullish entries again or accumulating the move up. Because I'm trading this on an inverse swap contract. So it doesn't matter if I win a short or a long trade, I'm still paid out in Bitcoin. Then when that account gets to a specific size, I take those funds out and then put them into the HODL account. So it's all I'm doing. I'm just trading Bitcoin to accumulate Bitcoin. It's a fantastic tool. Fantastic tool. One of the best financial vehicles on the planet, in my opinion. That's why I've been looking at Bitcoin so much as of late. It's one asset. One thing to watch, one thing to trade. And I do know that I want to own as much Bitcoin as I can because long term, I believe this thing will be worth $1 million. Nifty 50, I don't know the ticker to that, unfortunately. On all things right now, William, tech stocks are not doing so hot. All of them. I mean, Netflix is off big time. Amazon, they're going to follow the overall market. Right now, SPY and the SPXs are at the swing lows, the yearly lows. So 2022 lows, we're around those lows. So, is it time to buy? Maybe, maybe not. We've only got one hike. I'd say, this is my strategy for year 2022 for stocks, because I am an investor in stocks. I do buy stocks. I am not buying yet. I am not buying yet. Okay. I do still own most of my stocks that I haven't sold anything, but I have stopped buying. I want to see more hikes. I want to see how the market reacts once we've gotten into like rate hike number 3, rate hike number 4. Right now, we've only had one rate hike, and Bitcoin is at the low end of the range. What's Bitcoin going to look like when we get to rate hike 5 and rate hike 6? What's it going to look like then? That's what I'm waiting on, right? For people to think that rate hike 3, 4, 5, 6, 7, 8, Bitcoin's going to be going to the moon. They don't understand, the overall market. They don't understand fundamentals. They don't understand They just think Bitcoin is this amazing, awesome thing that's just going to do complete opposite to everything else. And they're always going to believe that. They're always going to believe that. People that are saying, I think this is a good area to buy. You know what? It could be long term, because once Bitcoin gets back above $40,000 in a few years, then you will be looking good. But, there's a good, huge chance that you're going to be setting in drawdown if you buy in this range in the near term future this year, right? Because there is 6 rate hikes on the schedule. There's 6. The Fed has said we are going to hike rates 6 more times this year. So let me just put it this way. I'll start being a buyer when the Fed comes out and says, I think we got control of inflation. I think we're going to stop hiking rates. That's when I want to be a buyer again. That's when I'll start adding to my stock portfolio, and as long as I can trade Bitcoin every single day because it's open 24/7, which is fantastic. So I have no reason to worry about anything right now. I am not missing anything either. For those that think that I am missing anything, my account on Bitcoin, on KuCoin, has nearly tripled while everybody else is setting in a drawdown. I'm making money, so I'm not really concerned about people thinking I'm going to miss anything. Just be careful. Understand that there's more rate hikes coming, and just be careful. That's all you can do, guys. If you want to buy it, because I don't know what price is going to do. Neither does anybody else. But we do know the Fed is expecting or going to do more hikes. And we had one hike. Maybe the market's priced in all 6 by now. Who knows? It's unlikely, but we'll see what happens. Just keep watching price. It's at support. I mean, support is the best place to look to be a buyer. Ever. But understand that you're not in an uptrend either. Not for the year 2022. Or for the late half of 2021 for that matter. So it's your call. It always will be. Just, make sure you know what to do. Make sure you know how to manage that risk. All right, guys, I'm going to go ahead and wrap it up. It is a little bit late. Yeah. Thanks for getting me on to the inverse swap contract. Hey, it's my pleasure. I think it's a fantastic product. I like to put my Bitcoin to work. Just because we're trading sideways to down doesn't mean that you can't make money, right? The markets are the markets for a reason. Professional traders are making money every single year, no matter what the markets are doing. So instead of being the guy or following the guy on Twitter that says buy here, 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 while markets just going lower, 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 eventually, if you follow those kind of signals, you're going to be bled dry. Instead, follow the people who have a history of being right. Jordan used to say that all the time. So, and it's a good quote. Follow the people that are doing it right, not the people that are doing it wrong. But there's a time horizon, obviously, with anything. If you're just a hodler of Bitcoin, you can buy it literally anywhere. especially if you're buying it with an amount of money you don't mind losing. You can literally buy it anywhere, any day, all day. Just make sure your risk is managed. You guys have a fantastic day. If you have any questions, or if you're catching a replay of this video, you know what to do. Just drop them down in the comment section, as I do answer all questions. Make sure you smash the like button. If you're new, hit that subscribe button. You guys have a fantastic day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.